Let's check on the markets, shall we? I'm going to first talk about the indices, and then I'm going to go down through sectors. Let's start with the SPX. This is the S&P. We had a bearish stint that lasted about 6 weeks, and we have had some of the most bullish days we've seen all year. So the bounce has been pretty phenomenal. This is the all-time high. We are at all-time highs. I shouldn't go all in because the market is still at all-time highs. What if we have a small correction? So we have had corrections before, like this one, for example. And the market is headline happy. There's hardly a headline they hate. So you know my stance? Cautiously bearish. Selling credit call spreads, I'm winning on those. Buying a few puts here and there with stocks that I think are overpriced. Let's start with the XLF. Disclosure, I'm short the XLF. My thesis is that we've seen the top and I'm looking for a breakdown from triggers. So a small drop below 40 or 39.50 might bring me to 37.50. You should be aware that on a weekly basis, there is a bearish setup for it, this red W. And the targets on that is 36. Within that, you need to know that Berkshire Hathaway, BRK.B, that's the biggest component. The second one is JP. The third one is Bank of America. The energy sector, XLE is actually not the energy sector. It's just a couple of companies. Chevron, Exxon are a huge chunk of it. So when I'm thinking XLE, that's what I'm thinking. What is Chevron? What is Exxon doing? That red W is bearish. It hasn't played out yet. The target is 68 to 70. That's target one. But it hasn't played out yet. If I'm looking to invest long in these companies or in the XLE, consequently, this is not the time I load up. So I'm going to talk about an acronym. NOPE. N-O-P-E. Not an obvious point of entry. Nope. The XLU today soared. Now, with the drop of interest rates, the knee-jerk reaction of Wall Street is to buy utilities because historically they pay dividends. They're still tied to that. I would not touch them here. If I'm long, I can trim, lock, enjoy it, and time the exit. Home builders. Technically, if we drill down to a 2-hour or a 1-hour chart, you can see if I look left, now I have immediate resistance at 108, immediate following resistance into 110. Those are exit spots. Conversely, we have a lot of support below and it's kind of scattered all over the place. I'll name a few, 101.50 and 100. If you lose 100, you may accelerate lower towards 94. XLB, those are the materials. Let's zoom out and get the big picture. I would be cautious. There might be some downside. So I think that it's easier to get to 88.50 than to 93.50, for example. XLC, that's, I believe, it's heavy in a couple of companies, so make sure you know that they are, and don't pick a fight with Meta. So if the market breaks out, this one may follow. This is not an obvious entry point. A dip through 200 or 198 might get me excited about trading it up from there.